Okay. Good evening, everyone. Welcome again to another live streaming of Basic Transfer Pricing Philippines. And tonight, I will discuss to you the frequently asked questions, and also we will continue with our discussion on the OECD transfer pricing guidelines on administrative provisions and also on the secondary adjustments. No, so we'll continue with our discussions. For the frequently asked questions, is focused on what is transfer pricing. So what is transfer pricing? Transfer pricing is the transfer of goods and services from one part of an organization to another, or from one division of the corporation and to another division, or from a related party transactions to another related party transactions. So transfer pricing. And what is the in knowing the true transfer price, what is the method used or the principle adopted by the internationally accepted principle on the OECD Model Convention on Income and Capital, adopted the arm's length principle as the principle applied in knowing what is the correct transfer price between related party transactions. So what is the arm's length principle adopted in transfer pricing? The arm's length principle adopted by transfer pricing as provided in Article 9 of the Model OECD Convention will tell us that the true transaction or the correct pricing of goods and services is that of the independent transactions. And if in the course of the financial and commercial transactions between related parties, and they are not observing the arm's length principle, then there can be adjustment. And how this transfer pricing adjustment be made to make the related party transactions comparable with that of the independent party transactions. And what is the rationale? Because according to this principle, the independent transactions is the true transactions. Why? Because the independent transactions are influenced by the market forces, while the related party transactions are influenced by the control of the parties. No? So the true transaction or the benchmark of the transactions are the independent parties. And if you want to know the real or the true transfer price between related parties, then we have to compare it to the comparables, which are the independent parties. No? So what are the so we have defined the transfer pricing. And what are the benefits in adapting the transfer pricing law? If you remember, no, matagal na itong transfer pricing, no, sa Pilipinas. In fact, sa ibang bansa, mga 1960s, ano na to, nagagamit na ito ng US in collecting so much taxes, especially nung nag-launch na ng globalization. No? So marami na silang na-kolekta na mga taxes because of this transfer pricing. But in the Philippines, noong 2013 lang tayo nagkaroon ng transfer pricing guidelines. No? And what are the benefits in adopting this transfer pricing law? The benefits are that we can curb tax evasion. Why? Because the transfer pricing law here in the Philippines is the Article 50 of the National Internal Revenue Code, which gives the power to the commissioner to allocate income and deductions if it is apparent that there is tax evasion, in order to defeat tax evasion. So the law empowers the Commissioner of Internal Revenue to allocate, distribute, and appropriate, no, or distribute this profit between related parties in order that it can be taxed accordingly to avoid uh, tax evasion. No? So much more so under the train law, the power of the commissioner was increased. No? So very powerful na yung commissioner, especially in this acquiring or gathering information about tax evasion. No? So what are the economic forces that affect the market? No? So the forces that affect the market, economic forces, no, are the law of the supply and demand. No? And that is a natural law. The economic law is a natural law. No? We cannot change that. So the law of supply and demand should influence the price in the market. No? And like in related party transactions, where one party control the others, there is no open market prices. Anong meron dyan? The controlled transactions or the uh, controlled pricing, no? Yung imposed pricing on goods and services. It's determined by the will of the parties involved, especially sa related parties. Okay. Describe the operations of multinational corporations. Multinational corporations are significant in their operation nationwide, wherein they have a global presence. No? So these multinational corporations are establishing different subsidiaries, different branches, whatever their structure are, and they have significant business presence in different parts of the world. No? So that they establish related party transactions between those subsidiaries or branches. Know the principles in transfer pricing. What are the principles in transfer pricing? We have this arm's length principle. And what does the arm's length principle told us? The arm's length principle will tell us that the independent party transactions are the real transactions as compared to the related party transactions, which are controlled transactions. So the true transactions is the independent party transactions because there is no element of control. The pricing of goods and services are influenced by the market forces. And what are those market forces? The law of supply and demand. While in the related party transactions is influenced by one party who is controlling over the other party. Okay, so understand how these related parties and unrelated parties deal with each other. So they really deal differently, no? So when we say related party transactions, there is a link, there is a relationship, and according to the uh, International Accounting Standards and Philippine Accounting Standards 24, in related party transactions, there is a link or relationship between the related parties. The one party control the other, and the purpose is for the benefit of the one who controls the other parties. For the benefit of that other parties. So what are the tools in avoiding double taxation? So the tools in transfer pricing to avoid double taxation is, number one is there is a tax treaty, no? Availment of the tax treaty relief. That can be a tool for double taxation. And also the mutual agreement procedure or the MAP, which is embodied in Article 25 of the Model OECD Convention and also in the treaty, no? In the treaty of the Philippines with other countries, we have the avoidance of double taxation through the availment of tax treaty relief. Okay. So for the principles of transfer pricing, which is the arm's length principle, it is the internationally agreed principle, and it is embodied in Article 9 of the Model OECD Convention, telling us that um, the financial and commercial transactions between the related parties, no, should be compared to that of the commercial and financial transactions between independent parties, no? And if they're not similar, then we have to adjust, no? And that's why we also have this comparability factors, because the heart of transfer pricing is comparability. And what are we going to compare when we say that in transfer pricing? So we have to compare the depending on the methods that we are using. So what are we going to compare when we apply the Armstrong principle? We are going to compare the for comparable and controlled price method, we have to compare the price. For the resale price and cost plus method, we will compare the gross profit. For the transactional net margin method, we have to compare the net margin. But for the profit split, which is also the subject of the recent study of the OECD, no, they came into um, recommendations that the profit split method should have a defined allocation gain. So it depends on how these countries who are member of the OECD countries will resolve the or will designate allocation case on the profit split, no, or in splitting the profit between related parties. So what are the other frequently asked questions, no? Especially now that the BAR requires attachment to the annual income tax return. And what are these attachment? These are the BAR Form 1709. Ano yung BAR Form 1709? Ito yung documentation of related party transactions that are required to be attached when the company with related party transactions will file their annual income tax return. No? So nag-umpisa na siya because the regulation has affected on July 25, 2020. So nag-umpisa na. O for those calendar year ending March 2020, umpisa na sila, ni-require na sila to attach related party documentation in the filing of their annual income tax return and fill up this BIR Form 1709. No? So yun yung mga ano natin. So paano mag-establish ng policy o ng mga documentations itong ating mga companies with related party transactions, no? It depends on the transactions that you have. So anong klaseng mga documentation ang kailangan sa transactions natin? It should be verifiable and adequate. At ano pa, under Revenue Regulations 2-2013, ano pa yung requirements for the documentation? It should be contemporaneous. No? By contemporaneous, we mean that the documents or the documentation requirements should be existing at the time of the transactions. It is not that you just make the documentation after the transactions. It should be existing at the time of the transaction. So it is contemporaneous. Okay. May shout-out, Hari?
Wala pong shoutout po pero may viewers po tayo na 10 viewers.
Okay. Sige, so wala rin tayong mga questions, no?
Wala po.
Okay, so we have discussed na kung ano yung mga principles, mga tools ng transfer pricing, no? At saka bakit isa pa, bakit ngayon lang itong Pilipinas natin na parang na-push through sila dun sa pag-apply or pag-conduct ng transfer pricing audit? Because of the Senate inquiry on the case of ABS-CBN, and the inquiry also deals with the transfer pricing issues in the dealings of related parties by the ABS-CBN companies, no? So dito talaga na trigger na mag-aral ng transfer pricing ang BAR, no? Anyway, the BAR has the initiatives. Kaya ngayon meron na silang RAMO 1-2019, which are the transfer pricing audit guidelines ng Pilipinas. No? So, we will have our transfer pricing updates on Saturday, Hari.
Yes, ma'am.
Ano yan? Anong date? November?
November 14 po.
Via
Via YouTube channel. Basic transfer pricing YouTube channel.
Okay, so that is 8 to 5, no? The afternoon. Ano yung mga topics natin?
Ah,
So our topics would be the overview of the RAMO 1-2019, the transfer pricing audit guidelines. And then we have the yung preparation ng segmented financial statements. We have the 2020 OECD transfer pricing guidelines on financial transactions. Meron pang isa yung transfer pricing documentation, yung updates natin doon sa mga requirements sa transfer pricing documentation under the BIR Form 1709 attachment to the ITR, no? So, pag-usapan natin doon sa Saturday, that is a one-day seminar, no? Ilan na yung ano sa atin?
ang pagtingin ko kayo naman tanghali nasa 45 po. Yung nag-register.
Naka-register na. Okay. So that is free, no? The transfer pricing updates natin is free, no? Okay. Okay. So let us go continue with the frequently asked questions, no, dito sa transfer pricing. And what are these frequently asked questions na sasabihin nila, ano yung legal basis ng transfer pricing in the Philippines? Also, what are the legal basis ng transfer pricing dito sa Pilipinas? Ito yung we follow also the internationally accepted principles because it is embodied in our constitution that the Philippines adheres to the generally accepted internationally accepted general principles, no? So what are that? It is embodied in Article 9 of the OECD Model Tax Convention for cross-border transactions, and also Article 7 of the OECD Model Tax Convention on Business Profits, and then Article 5 of the OECD Model Tax Conventions on Permanent Establishment. So more or less, ito yung mga nagbibigay sa atin ng batas tungkol sa transfer pricing, no? And then sa Pilipinas, we have Section 50 of the Philippine Internal Revenue Code, which gives the power to the commissioner to allocate and distribute income and deductions, no? Which is similar, same wordings with that of Section 482 of the IRC or the Internal Revenue Code of the United States. No? The same na the same. Kasi we pattern in our tax code sa United States, no? And then we have the related Philippine rules and regulations, no? We have this Revenue Regulations 2-2013. Ito yung transfer pricing guidelines. And then we have the RAMO 72-2010. Ano to yung 72-2010? Ito yung sa tax treaties, no? We also have the RMO 36-2010, RMC 29-2010, RMC 26-2008, RMO 63-99, RMO 61-98, RAMO 1-98, and then RAMO 1-95, and Republic Act 1021 on exchange of information. And of course, yung latest natin, yung RR 22-2020, yun yung attachment ng PR Form 1709 sa atin pong annual income tax return. No? And then yung RAMO 1-2019 on the transfer pricing audit guidelines. No? Okay. Ano yung sinasabi po dito sa Article 9 of the Model OECD Convention, which is the basis ng arm's length principle adopted by transfer pricing. Ano sabi niya? Where conditions are made or imposed between the two associated enterprises in their commercial or financial transactions which differ from those which would be made between independent enterprises. Iba yung ginagawa ng related parties sa compared doon sa independent parties. Then any profits which would, but for those conditions have accrued to one of the enterprises, but by reason of those conditions have not so accrued, may be included in the profits of that enterprise and taxed accordingly. No? If you read further the provisions of Article 9, nakalagay din doon na yung other state na kung saan nandoon niya dineclare yung income should adjust, no? The income tax due. Kasi bakit i-adjust? Kasi ibalik niya yung ibang income na binayaran na niya, ibalik niya ngayon doon sa kung sino ba talaga yung may-ari at dapat na sa kanya yung income. So that income will be taxed in the place where the state or the entity is having business with, doon siya magbabayad ng kanyang taxes, no? So ano pa yung purpose nitong transfer pricing? In order that its tax jurisdictions or tax authorities or the country where the multinationals or the entities of business will have a share on the payment of taxes, no? Kasi yung ginagawa ng iba, doon na lang sa parent company, nandoon na lahat yung binabayaran yung tax. So, yung mga branches, yung mga subsidiaries, puro net loss, wala nang binabayaran na tax. That's why we have this transfer pricing, which is what we term as economic taxation, so that the share in the payment of taxes should belong to the state where the entity is having business with. No? Okay. Shout out.
Wala kung nagpo-comment po, ma'am. Pero may viewers po, ma'am, na 10 pa rin po.
Okay.
I-share ako sa Facebook mo.
Sige. So, balik tayo sa arm's length principle, no? So, ano ba yung arm's length principle natin? Ito yung sa arm's length principle po natin, ito yung magko-compare na tayo ng transactions ng related parties with that of the independent parties. And along the way, while we are comparing, ano yung 5 comparability factors na dapat natin i-compare, no? Gamitin natin. Ito yung characteristics of goods and services, no? Whether tangible or intangible. At ito rin yung anong tawag dito? Yung functions, assets, and risk. And then the contractual terms, the economic conditions, and the business strategies, no? So, ito po yung may book in transfer pricing, the basic transfer pricing, which you can buy for 500 pesos, no? Ito, 2013, I'm going to update this advanced transfer pricing. So, hopefully, ma-publish natin yan in 2021, no? Along with, kasi ang daming, ang daming pagbabago because of this pandemic. Yan, i-tackle na rin natin yung digitized businesses, no? Kasi, may mga pagbabago na sabi ko, dapat itakil din natin in our new books, no? Marami tayong didiscuss na mga bagay-bagay that will be applicable now, especially under the new situations that we have, no? But for the arm's length principle to work with, ito yung meron tayong related party transactions, i-compare natin sa independent party transactions. At anong titingnan natin doon? Dapat yung transactions na yun are the same. Kasi pag hindi sila same, anong sabi dito sa arm's length principle, dapat mag-adjust ka. At ano yung i-adjust mo? You try to analyze kung ano yung pagkakaiba ng dalawang transactions, and then kung may differences that materially affect the transactions, then hindi sila comparable, hindi mo gagamitin yon. But if pag-analyze mo, na discover mo na itong differences can be adjusted, then mag-adjust ka to make the two equal, no? So yun yung pagkatapos na nag-compare ka, you must have the comparability analysis, and after that magkaroon ka na ng comparability adjustment. During your comparability analysis, you use the transfer pricing method, mag-compare ka, no? And what are those 5 transfer pricing methods natin? Ito yung comparable uncontrolled price method, the resale price method, cost plus method, the transactional net margin method, and the profit split method, no? So yun yung gagamitin natin sa transfer pricing analysis natin. And pagkatapos na nagkaroon na tayo ng analysis at kailangan natin mag-adjust, then we have to adjust what we call as the comparability adjustment. And sometimes, so dumating na tayo doon sa comparability adjustment, this is the time na magkakaroon na tayo ng adjustment. And during the audit, ito na yung hihintay ng examiner because nandito na yung findings as to how much should be the deficiency that is going to be paid by the taxpayer, no? Under audit, under transfer pricing audit. Okay? Wala pa rin?
Wala pa rin po nag-comment.
Okay.
Sisend ako sa messenger. Invitation.
Okay. Okay. Ito pa yung sa mga questions or mga concerns, no? Ang question dito is, what makes arm's length principle difficult to apply, no? So ito na. Kasi pag sinabi mo transfer pricing, ang daming nagsasabi kaagad na, ay, ayoko niyan, mahirap yan, no? So, what makes arm's length principle in transfer pricing difficult to apply, no? Kasi, di ba sabi natin, pag in-apply natin yung arm's length principle, magkakaroon tayo ng comparison between the related parties and that of the independent parties. Ano yung i-compare natin? Siyempre, i-compare natin same transactions, pero ang isang transaction belongs to the related parties, yung isang transactions belong to the independent parties. No? So, yun ang i-compare natin. Hindi pwede na i-compare mo yung related party transactions to another related party. So, dapat ang comparison mo, related party to independent party transactions. And what makes it difficult to apply? O paano? As a transfer pricing analyst, no, ang experience ko, sobrang hirap maghanap ng comparables, no? Especially if there are many players in the same industry in the market, no? Di ba, mga 2,000, 5,000, 100,000 yung entities engaged in that kind of business. So, paano ka maghanap, no? Ubusin mo ba lahat yung 100,000 na yan? I-compare mo dito sa entity na under study, no? So, hindi naman ganoon, no? Sabi naman ng OECD, 8 to 12 comparables are enough, no? So, ano din siya, subjective. Why? Kasi pag gumagawa ka ng transfer pricing analysis mo, ikaw yung mamili ng comparables mo. So, ano tong tinatawag na comparables? ito yung mga entity or company na i-compare mo dito sa ginagawan mo ng transfer pricing analysis, no? So, bakit siya mahirap? Because of the data, lack of data or lack of information. Especially if yung comparables mo, hindi ka naman nila bibigyan ng information coming from them, no? Na kailangan doon sa study mo. Hindi nila i-divulge sa iyo yung mga especially confidential information nila na ibibigay doon sa gumagawa ng transfer pricing study. So what makes arm's length principle difficult to apply? The absence or the availability of the information, no? With the comparables or and, uh, with the entities that you are going to compare, no? Sobrang hirap maghanap. So what are the alternatives to the arm's length principle in avoiding double taxation? Compare it with the arm's length principles. Actually, sa mga conventions, no, international conventions, they are trying to make an alternative with this transfer pricing, no? But up to now, balik pa rin sila sa transfer pricing. Kaya nga ako natutuwa because sabi ko, itong transfer pricing na tinutukan ko na for how many years? For 12 years na because I started studying transfer pricing in 2008, no? So 2020 na ngayon. So it has been for 12 years already. At natutuwa naman ako and that even the trend now after the pandemic, after the new normal on the digitized businesses, there are so many changes in the working environment of people, but transfer pricing is still there, no? Hindi pa binibitawan ng OECD because the transfer pricing or the arm's length principle is the most effective among the alternatives, no? So, although maraming nagsasabi that they want certainties in taxation, no? And they want a specific rate or allocation K when it comes to the splitting of profits, especially in multinational corporations. But it was torn down by the study or by the Center for Tax Policies and Administration. It was torn down kasi allocation can be challenged. Why? Because of the differences or the unique situation for every entity or for every transaction. So, what are you going to consider? The facts and circumstances of the case. So, pagka magkaiba yan, hindi ka pwedeng maglagay ng fixed na allocation K, no? Na ito dapat mag-split ng profit o kaya ito dapat yung transfer price, no? It should be according to the facts and circumstances of the case. So that its case ng transfer pricing, its company should have its own transfer pricing analysis report, no? At yan yung nire-require dito sa BIR Form 1709 po natin. Okay. Okay. So ano yung mga activities ng independent enterprise compared to the controlled enterprise, no? Ang independent enterprise, ang sabi na natin, ang influence niya is the market forces. And ano yung market forces na yan? The law of supply and demand, no? Ito namang controlled transactions, are they affected with the law of supply and demand? Not so much. Why? Kasi controlled transactions sila eh, no? Ang nagpapairal sa kanila, ang gumagawa ng pricing sa kanila are the parties involved in the related parties, hindi yung independent na factors na law of supply and demand, no? Sa related parties, iba. Okay. Ito. Okay, may isang question dito, no, about the best method rule. Kasi sabi na nga natin, sa transfer pricing, magko-compare tayo, and sa pagko-compare natin, gagamit tayo ng iba't ibang klaseng transfer pricing methods. No, so ang isang tanong dito is, ano ba yung the best method na applicable to a certain industry, to a certain taxpayer, or to a certain, ano tawag dito? uh, kind of business, no? So, sabi ng OECD, wala. Why? Because walang preferred methods, no? But what you are going to do is to recommend the best method, no? If you try to visit the provisions of this Revenue Regulations 2-2013, meron siyang sinasabi doon na apply all the methods and then recommend the best method. So we have the best method rule in the Philippines. Anong gagawin mo? Apply mo lahat ng methods, the comparable uncontrolled price method kung available, kung po pwede, or the resale price method, the cost plus method, the transactional net margin method, and the profit spread method, no? And then, ikaw na mismo mag-recommend kung ano yung best method na pwedeng gamitin sa company mo na which is under transfer pricing study, no? So, yun po yung tinatawag natin na best method rule, no? Apply all the methods and then recommend, give reasons why is it that you recommend a particular method to be the best method. Okay. So, wala pa rin. Ilan na yung viewers natin?
Viewers, kaya namin na walo po.
Okay. So, we will continue with our discussions on the, ano na, kasi wala naman tayong frequently asked questions, no? Yung mga discuss ko sa inyo, yun yung mga important na concerns during the uh, mga seminars natin sa transfer pricing, no? So, let's have a 5 minutes break. Kasi maraming mali.
Transfer pricing methods lang po.
Hmm. Okay. So let's continue with our discussions on the OECD transfer pricing guidelines, the 2017 guidelines, no? So we're now on the secondary adjustments, no? So what are these, what we call as secondary adjustments? Because after we have done with the primary adjustment, no? Kailan ba tayo nag-a-adjust? O unang-una, nagkakaroon tayo ng adjustments after we have done the comparability analysis. So, nagkaroon na tayo ng mga comparables, nag-compare na tayo, nagkaroon na tayo ng comparability analysis, and we found out the transactions between independent and related parties may difference, no? Hindi sila similar. So, we do the adjustment, no? So, yun yung tinatawag natin na primary adjustment. After making the primary adjustment and during the process, meron pa tayo na-discover na kailangan pa rin na-apektuhan yung ibang transaction. So, we have to make another secondary adjustment, no? Sa during my audit, no, while I was still in the BIR, napakarami yan. Pag nagkaroon ka ng findings doon sa isa or nagkaroon ka ng adjustment doon sa isa, hindi mo maiwasan, meron kang secondary adjustment, minsan may iba pang mga adjustment na kailangan gawin mo, no? Okay. So secondary adjustment, corresponding adjustments are not the only adjustment that may be triggered by a primary transfer pricing adjustment, no? So primary transfer pricing adjustment and their corresponding adjustment change the allocation of taxable profits of an M&E group for tax purposes, but they do not alter the fact, no, that the excess profits represented by the adjustment are not consistent with the result that would have arisen if the control transaction had been undertaken on an arm's length basis. No? So to make the actual allocation of profits consistent with the primary transfer pricing adjustment, some countries having proposed a transfer pricing adjustment will assert under their domestic legislation a constructive transaction, no? So a secondary transaction where the excess profits resulting from a primary adjustment are treated as having been transferred in some other form and taxed accordingly, no? Ordinarily, the secondary transactions will take the form of constructive dividends, constructive equity contributions, or constructive loans, no? So may mga tinatawag na constructive dividends, constructive equity contribution, or constructive loans, no? So iba-iba yung ginawa. Constructive dividends, constructive equity. Ano itong mga example ng constructive dividends? Ito yung distribution ng income, no? Indirectly, it is distribution of income. Halimbawa na lang, may withdrawals yung stockholders sa company, no? So, ang tawag pala doon constructive dividend na kasi parang kinukuhan na niya yung kita niya doon sa companies. Ano naman tong constructive equity contributions? Ito yung examples dito. Ito yung mga advances, no? Advances ng stockholders to the corporation. Sometimes napakaliit ng capital ng contribution, thinly capitalized siya. So ano ginagawa to augment the capital needed? Mag-advances from stockholders, no? So, yun yung tinatawag na constructive equity contribution. Instead na ang stockholders, doon siya mag-invest sa subscribed capital stocks, dito na siya sa advances to the company, no? So, yung tawag doon, constructive equity contributions. No? Ano naman tong constructive loans, no? So, ganun din. Parang pinautang mo din yung company, no? Parang advances, utang ka. And then, dito sa constructive loans, dapat meron kang interest, no? Interest ka dito na titingnan. Ano ba yung benchmark natin sa interest? The central bank offered rate, no? So, for example, a country making a primary adjustment to the income of a subsidiary of a foreign parent may treat the excess profits in the hands of the foreign parent as having been transferred as a dividend. No? So, in which case, withholding tax may apply. No? So, in that case, kung may mga excess profits, no, may withholding tax dyan na issue or dapat gawin. It may be that the subsidiary paid an excessive transfer price to the foreign parent as a means of avoiding that withholding tax. No? So, secondary adjustment attempt to account for the difference between the redetermined taxable profits and the originally booked profits. No? So, yun yung secondary adjustment. The subjecting to tax of a secondary transaction give rise to a secondary transfer pricing adjustment or secondary adjustment. Thus, secondary adjustments may serve to prevent tax avoidance. So ano bang purpose ng secondary adjustment? Avoid tax, prevent tax avoidance. No? The exact form that a secondary transaction takes and of the subsequent secondary adjustment will depend on the facts of the case and on the tax laws of the country that asserts the secondary adjustment. No? So, yan yung siguro mas mahirap pa na trabaho ng examiner kasi hirap ka na nga doon sa primary adjustment, pero pa palang secondary adjustment. No? So, another example of a tax administration seeking to assert a secondary transaction may be where the tax administration making a primary adjustment treats the excess profits as being a constructive loan from one associated enterprise to the other associated enterprise. No? So yun yung sinabi natin kanina na constructive dividend, constructive equity contribution, constructive interest. No? Magkakaroon tayo ng adjustment doon. So yun yung mga parang candidate para sa secondary adjustment. Okay. The tax administration making the primary adjustment will then seek to apply the arm's length principle to this secondary transaction to impute an arm's length rate of interest. So, ano yung gagawin natin doon sa mga secondary adjustment na yan? Gagawin natin is to see to it that the arm's length principle have been applied on these transactions. No? The interest rate to be applied, the timing to be attached, to the making of interest payments, if any, and whether interest is to be capitalized would generally need to be addressed. The constructive loan approach may have an effect not only for the year to which a primary adjustment relates, but to subsequent years until such time as the constructive loan is considered by the tax administration asserting the secondary adjustment to have been repaid. No? So, a secondary adjustment may result in double taxation unless a corresponding credit or some other form of relief is provided by the other country for the additional tax liability that may result from a secondary adjustment. Where a secondary adjustment takes the form of a constructive dividend, any withholding tax which is then imposed may not be relievable because there may not be a deemed receipt under the domestic legislation of the other country. No? So yun yung mga domestic legislation ng country that adopts the transfer pricing. No? The commentary on paragraph 2 of Article 9 of the OECD Model Tax Convention notes that the article does not deal with secondary adjustments, and thus it neither forbids nor requires tax administrations to make secondary adjustments. In a broad sense, the purpose of double tax agreements can be stated as being for the tax avoidance of double taxation and the prevention of fiscal evasion with respect to taxes on income and capital. So yun talaga ang purpose ng tax treaty natin, no, to avoid double taxation. Many countries do not make a secondary adjustment either as a matter of practice or because the respective domestic provisions do not permit them. Do not permit them to do so. No? Some countries might refuse to grant relief in respect of other countries' secondary adjustment, and indeed, they are required to do so under Article 9. No? Secondary adjustments are rejected by some countries because of the practical difficulties they present. So, for example, if a primary adjustment is made between brother or sister companies. Ano yung brother sister companies? Ito yung mga related parties. No? So the secondary adjustment may involve a hypothetical dividend from one of those companies up a chain to a common parent, no? Followed by constructive equity contributions down another chain of ownership to reach the other company involved in the transaction. So many hypothetical transactions might be created, raising questions whether tax consequences should be triggered in other jurisdictions besides those involved in the transaction for which the primary adjustment was made. This might be avoided if the secondary transaction were a loan. But constructive loans are not used by most countries for this purpose, and they carry their own complications because of issues relating to imputed interest. No? So that is the case of the uh, Phil Invest, no? Yung natalo yung BAR sa court because of the term na imputed interest, no? It would be inappropriate for minority shareholders that are not parties to the controlled transactions and that have accordingly not received excess cash to be considered recipient of a constructive dividend, even though a non-pro-rata dividend might be considered inconsistent with the requirements of applicable corporate law. So in addition, as a result of the interaction with the foreign tax credit system, a secondary adjustment may excessively reduce the overall tax burden of the M&E group. In light of the following difficulties, tax administrations, when secondary adjustments are considered necessary, are encouraged to structure such adjustments in a way that the possibility of double taxation as a consequence thereof would be minimized, except where the taxpayer's behavior suggests an intent to disguise a dividend for purposes of avoiding withholding tax. No? So, paano may avoid yung withholding tax on dividend? Kasi subject yan sa 10%, no? Pagka dividend between from a company to its individual stockholders, no? Subject to 10% final withholding tax. Pero pagka dividend declared by a company to another company, exempt, no? In addition, countries in the process of formulating or reviewing policy on this matter are recommended to take into consideration the above-mentioned difficulties. No? Some countries that have adopted secondary adjustments also give the taxpayer receiving the primary adjustment another option that allows the taxpayer to avoid the secondary adjustment by having the taxpayer arrange for the M&E group of which it is a member to repatriate the excess profits to enable the taxpayer to conform its accounts to the primary adjustment. The repatriation could be effected either by setting up an account receivable or by reclassifying other transfers, such as dividend payments, where the adjustment is between parent and subsidiary, as a payment of additional transfer price where the original price was too low, or as a refund of transfer price where the original price was too high. No? Okay, so yan yung repatriation ng capital. No? So where a repatriation involves reclassifying a dividend payment, the amount of the dividend up to the amount of the primary adjustment would be excluded from the recipient gross income because it would already have been accounted for through the primary adjustment. No? So the consequences would be that the recipient would lose any indirect credit or benefit of a dividend exemption in an exemption system and a credit for withholding tax that had been allowed on the dividend. No? So sa atin, ano ang dividend natin? 10% na final withholding tax on dividend. When the repatriation involves establishing an account receivable, the adjustments to actual cash flow will be made over time, although domestic law may limit the time within which the account can be satisfied. This approach is identical to using a constructive loan as a secondary transaction to account for excess profits in the hands of one of the parties to the control transaction. So, ito yung tinatawag natin na mga conduit entities or conduit company, no? So, ginagawa sila para lang makatipid sa tax. The accrual of interest on the account could have its own tax consequences, no? However, and this may complicate the process depending upon when interest begins to accrue under domestic law as discussed in paragraph 4.69. Some countries may be willing to waive the interest charged to these accounts as part of a competent authority agreement. Oh. Okay. Where a repatriation is sought, a question arises about how such payments or arrangements should be recorded in the accounts of the taxpayer, repatriating the payments to its associated enterprise so that both it and the tax administration of that country are aware that a repatriation has occurred or has been set up. The actual recording of the repatriation in the accounts of the enterprise from whom the repatriation is sought will ultimately depend on the form the repatriation takes. For example, where a dividend receipt is to be regarded by the tax administration making the primary adjustment and the taxpayer receiving the dividend as the repatriation, then this type of arrangement may not need to be specially recorded in the accounts of the associated enterprise paying the dividend. As such, an arrangement may not affect the amount of characterization of the dividend in its hands. On the other hand, where an account payable is set up, both the taxpayer recording the account payable and the tax administration of that country will need to be aware that the account payable relates to a repatriation so that any repayments from the account of interest on the outstanding balance in the account are clearly able to be identified and treated according to the domestic laws of that country. Oh? So in addition, issues may be presented in relation to currency exchange gains and losses. No? As most OECD member countries at this time have not had much experience with the use of repatriation, it is recommended that agreements between taxpayers and tax administrations for a repatriation to take place be discussed in the mutual agreement proceedings where it has been initiated for the related primary adjustment. No? Okay, so that is for the adjustment. No? So when does this adjustment happen? If there are differences between the related party dealings and that of the independent parties. Okay. Now let's go to simultaneous tax examinations. No? Definition and background. A simultaneous tax examination is a form of mutual assistance. No? Bakit siya mutual assistance? Used in a wide range of international issues that allows two or more countries to cooperate in tax investigation. Simultaneous, halimbawa, ini-examine ka dito sa Pilipinas on transfer pricing issue. Sabay din kayo pag ang parent company na sa halimbawa under investigation yung Japan company nyo and Philippine company. Simultaneous tax examinations can be particularly useful where information based in a third country is a key to a tax investigation, since they generally lead to more timely and more effective exchanges of information. Historically, simultaneous tax examinations of transfer pricing issues have focused on cases where the true nature of transactions was obscured by the interposition of tax havens. Ito yung mga tax havens countries na uh, have a very low tax or no tax at all. And the companies are tempted to have a shell companies registered in that company para doon nila itago yung ibang income nila at doon din nila ipasa yung expenses, no? Historically, simultaneous tax examinations of transfer pricing issues have focused on cases where the true nature of transactions was obscured, no? Parang naging gray area siya by the interposition of tax havens. However, in complex transfer pricing cases, it is suggested that simultaneous examination could serve a broader role since they may improve the adequacy of data available to the participating tax administrations for transfer pricing analysis, no? Mas maraming data kasi dalawang bansa yung nag-audit simultaneously. It has also been suggested that simultaneous examination could help reduce the possibilities for economic double taxation. Yes, kasi sabay na ang mag-audit eh. Reduce the compliance cost to taxpayers and speed up the resolution of issues. In a simultaneous examination, if a reassessment is made, both countries involved should endeavor to reach a result that avoids double taxation for the M&E group. Simultaneous tax examinations are defined in Part A of the OECD Model Agreement for the undertaking of simultaneous tax examination or OECD Model Agreement. According to this agreement, a simultaneous tax examination means an arrangement between two or more parties to examine simultaneously and independently each on its own territory, no? So pwede yung dalawang tax authorities. The tax affairs of taxpayers in which they have a common or related interest with a view to exchanging irrelevant information with this so obtained. This form of mutual assistance is not meant to be a substitute for the mutual agreement procedure. No? So any exchange of information as a result of the simultaneous tax examination continues to be exchanged via the competent authorities with all the safeguards that are built into such exchanges. Practical information on simultaneous examinations can be found in the relevant module of the Manual on Information Exchange that was adopted by the Committee on Fiscal Affairs on January 23, 2006. No? While provisions that follow Article 26 of the OECD Model Tax Convention may provide the legal basis for conducting simultaneous examinations, competent authorities frequently conclude working arrangements that lay down the objectives of their simultaneous tax examination programs and practical procedures connected with the simultaneous tax examination and exchange of information. One such agreement has been reached on the general lines to be followed and specific cases have been selected. Tax examiners and inspectors of each state will separately carry out their examination within their own jurisdiction and pursuant to their domestic law and administrative practice. No? So, pwede. Respectively sila na yung mag-conduct ng investigations. Okay, so what are the legal basis for simultaneous tax examination? Legal basis for simultaneous tax examinations are within the scope of the exchange of information provision based on Article 26 of the OECD Model Tax Convention. Article 26 provides for cooperation between the competent authorities of the contracting states in the form of exchanges of information necessary for carrying out the provisions of the convention or other domestic laws concerning taxes covered by the convention. Article 26 and the commentary do not restrict the possibilities of assistance to the three methods of exchanging information mentioned in the commentary or exchange on request: spontaneous exchanges and automatic exchanges. Simultaneous tax examinations may be authorized outside the context of double tax treaties. For example, Article 12 of the Nordic Convention on Mutual Assistance in Tax Matters governs exchange of information and assistance in tax collection between the Nordic countries and provides for the possibility of simultaneous tax examinations. This convention gives common guidelines for the selection of cases and for carrying out such examinations. Article 8 of the Joint Council of Europe and OECD Convention on Mutual Administrative Assistance in Tax Matters also provides expressly for the possibility of simultaneous tax examinations. Okay. In all cases, the information obtained by the tax administration of a state has to be treated as confidential, under its domestic legislation, and may be used only for certain tax purposes and disclosed only to certain persons and authorities involved in specifically defined tax matters covered by the tax treaty or mutual assistance agreement. The taxpayers affected are normally notified of the fact that they have been selected for a simultaneous examinations, and in some countries, they may have the right to be informed when the tax administrations are considering a simultaneous tax examination or when information will be transmitted in conformity with Article 26. In such cases, the competent authority should inform its counterpart in the foreign state that such disclosure will occur. Okay. Simultaneous tax examinations and transfer pricing. In selecting transfer pricing cases for simultaneous examinations, there may be major obstacles caused by the differences in time limits for conducting examinations or making assessments in different countries and the different tax periods open for examinations. No? Just like in the Philippines na meron tayong 3 years period to examine. No? Kasi after that, regularly, the tax case will prescribe. However, these problems may be mitigated by an early exchange of information schedules between the relevant competent authorities to find out in which cases the tax examination periods coincide and to synchronize future examination periods. No? So while at first glance an early exchange of information examination schedules would seem beneficial, some countries have found that the chances of a treaty partner accepting a proposal are considerably better when one is able to present issues more comprehensively to justify a simultaneous examination. So once a case is selected for a simultaneous examination, it is customary for tax inspectors or examiners to meet, to plan, to coordinate, and to follow closely the progress of the simultaneous tax examinations. No? So if you try to look at the Ramo 1-2019, andyan din po kung ano yung mga plan ng examiners in their conduct of the transfer pricing audit. So especially in complex cases, meetings of the tax inspectors or examiners concerned may also be held with taxpayer participation to clarify factual issues. No? So in those countries where the taxpayer has the right to be consulted before information is transferred to another tax administration, this procedure should also be followed in the context of a simultaneous examination. In this situation, the tax administration should inform in advance its treaty partners that it is subject to this requirement before the simultaneous examination is begun. No? So, sabihan muna. Simultaneous tax examinations may be a useful instrument to determine the correct tax liability of associated enterprises in cases, for example, in different taxing jurisdictions or more generally, where transfer pricing issues are involved. Simultaneous tax examination may facilitate an exchange of information on multinational business practices, complex transactions, cost contribution arrangement, and profit allocation methods in special fields such as global trading and innovative financial transactions. As a result, tax administrations may acquire a better understanding of and insight into the overall activities of an MNE and obtain extended possibilities of comparison and checking international transactions. Simultaneous tax examinations may also support the industry-wide exchange of information, which is aimed at developing knowledge of taxpayer behavior, practices, and trends within an industry, and other information that might be suitable beyond the specific cases examined. No? So yung binabasa ko po sa inyo is really the OECD transfer pricing guidelines. No? One objective of simultaneous tax examination is to promote compliance with transfer pricing regulations. No? So, ano to? Parang sa tax training natin, tax training for better tax compliance. So, ano yung ginagawa dito? To, para matulungan yung tax authorities on the simultaneous tax examination to support the industry-wide exchange of information. At ano yung aim niya? To develop knowledge of taxpayer behavior, practices, and trends within the industry. No? Okay, so one objective of simultaneous tax examination is to promote compliance with transfer pricing regulations. No? Obtaining the necessary information and determining the facts and circumstances about such matters as the transfer pricing conditions of controlled transactions between associated enterprises in two or more tax jurisdictions may be difficult for a tax administration, especially in cases where the taxpayer in its jurisdiction does not cooperate or fails to provide the necessary information in due time. So yung uncooperative ang taxpayer, diyan tumatagal ang case, no? The simultaneous tax examination process can help tax administrations to establish this facts faster and more effectively and economically, no? Simultaneous tax examination. The process also might allow for the identification of potential transfer pricing disputes at an early stage, no? Thereby minimizing litigation with taxpayers. This could happen when, based upon the information obtained in the course of simultaneous tax examination, the participating tax examiners or inspectors have the opportunity to discuss any differences in opinion with regard to the transfer pricing conditions which exist between the associated enterprises and are able to reconcile this contention. No? So the persons involved should discuss. When such a process is undertaken, the tax examiners or inspectors concerned should, as far as possible, arrive at concurring statement as to the determination and evaluation of the facts and circumstances of the controlled transactions between the associated enterprises, stating any disagreements about the evaluation of facts and any differences with respect to the legal treatment of the transfer pricing conditions which exist between the associated enterprises. Such statements could then serve as a basis for subsequent mutual agreement procedures and perhaps obviate the problems caused by one country examining the affairs of a taxpayer long after the treaty partner country has finally settled the tax liability of the relevant associated enterprise. No? So, for example, such an approach could minimize mutual agreement procedure difficulties due to lack of relevant information. No? In some cases, the simultaneous tax examination procedure may allow the participating tax administrations to reach an agreement on the transfer pricing conditions of a controlled transaction between the associated enterprises. Where an agreement is reached, corresponding adjustment may be made at an early stage, thus avoiding time limit impediments and economic double taxation to the extent possible. In addition, if the agreement about the associated enterprises transfer pricing is reached with the taxpayer's consent, time-consuming and expensive litigation may be avoided. Even if no agreement between the tax administrations can be reached in the course of a simultaneous tax examination with respect to the associated enterprises. No? So transfer pricing, the OECD model agreement envisions that either associated enterprise may be able to present a request for the opening of a mutual agreement procedure to avoid economic double taxation at an earlier stage than it would have if there were no simultaneous tax examination. So ito yung mga advantages po ng simultaneous tax examination. If this is the case, then simultaneous tax examinations may significantly reduce the time span between a tax administration's adjustments made to the taxpayer's tax liability and the implementation of a mutual agreement procedure. Moreover, the OECD model agreement envisions that simultaneous tax examinations may facilitate mutual agreement procedures because tax administrations will be able to build up more complete factual evidence for those tax adjustments for which a mutual agreement procedure may be requested by a taxpayer. No? So, nasa tax authority na yung mag-submit ng complete factual evidence, no, for the adjustment. Based upon the determination and evaluation of past and the proposed tax treatment of the transfer pricing issues concerned as set forth in the tax administration's statements described above, the practical operation of the mutual agreement procedure may be improved significantly, allowing the competent authorities to reach an agreement more easily. No? So ito yung role ng mutual agreement procedure. No? The associated enterprises may also benefit from simultaneous tax examinations from the savings of time and resources due to the coordination of inquiries from the tax administrations involved and the avoidance of duplication. In addition, the simultaneous involvement of two or more tax administrations in the examination of transfer pricing between associated enterprises may provide the opportunity for an M&E to take a more active role in resolving its transfer pricing issues by presenting the relevant facts and arguments to each of the participating tax administrations during the simultaneous tax examination. The associated enterprises may help avoid misunderstanding and facilitate the tax administration's concurrent determination and evaluation of their transfer pricing conditions. So, madagdagan yung ating discussions dito sa Saturday on the Ramo 1-2019. No? Na-tackle din po dito. Thus, the associated enterprises may obtain certainty with regard to their transfer pricing at an early stage. So, see paragraph 4.79. Okay. Recommendation on the use of simultaneous tax examination. So, sino yung magre-recommend? As a result of the increased use of simultaneous tax examinations among OECD member countries, the Committee on Fiscal Affairs decided it would be useful to draft the OECD model agreement for those countries that are able and wish to engage in this type of cooperation. No? So on 23 July 1992, the Council of the OECD made a recommendation to member countries to use this model agreement, which provides guidelines on the legal and practical aspect of this form of cooperation. Hari, ano mo yung aircon dyan. Sige, dito na lang. Okay. So with the increasing internationalization of trade and business and the complicity of transactions of M&E, transfer pricing issues have become more and more important, no? So you can just imagine na yung transfer pricing issues mo, ano pa yan, makakarating pa sa court, no? Okay. With the increasing internationalization of trade and business and the complicity of transactions of M&Es, no, transfer pricing issues have become more and more important. Simultaneous tax examinations can alleviate the difficulties experienced by both taxpayers and tax administrations connected with the transfer pricing of M&Es. No? A greater use of simultaneous tax examination is therefore recommended in the examination of transfer pricing cases and to facilitate exchange of information and the operation of mutual agreement procedures in a simultaneous examination. So if a reassessment is made, both countries involved should endeavor to reach a result that avoids double taxation for the M&E group. Safe harbors. Ano itong safe harbors? No? Kung i-translate mo to sa atin, ito yung mga safe harbors kung saan nagtatago yung mga ship pagka may mga calamities, no? Kaya safe sila doon, no? Parang sa taxpayer, may safe harbor din sila na saan ba sila safe, no? Na hindi sila ka-undergo ng thorough investigation. Kaya ang sabihin nyo na, ito yung gagawin namin, parang safe kami, no? Parang sa ginawa no ng BIR na meron ginawa yung BIR ng benchmarking. So kung nandun ka, pasok yung rate mo ng income tax at saka ng business tax mo, ng VAT at saka percentage, pasok ka sa ganung percentage na compliance, safe ka, no? So parang ganyan ang safe harbors. Introduction. Applying the Armstrong principle can be a resource-intensive process, no? Kasi hindi madali yung nagpapa-audit. Especially transfer pricing audit, more detailed ito compared to the regular audit. It may impose a heavy administrative burden on taxpayers and tax administrations that can be exacerbated by both complex rules and resulting compliance demands, no? So yung demand for compliance, ano yan mabigat, no? Kaya yung ating tax training na YouTube channel, tax training for better tax compliance. Somehow, meron tayong mga guides na papadali sa atin yung tax compliance, no? Nababawasan yung burden. These facts have led OECD member countries to consider whether and when safe harbor rules would be appropriate in the transfer pricing area, no? So kailan may safe harbor rules. When these guidelines were adopted in 1995, these guidelines, meaning the OECD transfer pricing guidelines, the view expressed regarding safe harbor rules was generally negative, no? Parang hindi tinanggap. It was suggested that while safe harbors could simplify transfer pricing compliance and administration, safe harbor rules may raise fundamental problems that could potentially have perverse effects on the pricing decisions of enterprises engaged in controlled transactions. It was suggested that unilateral safe harbors may have a negative impact on the tax revenues of the country implementing the safe harbor, as well as on the tax revenues of countries whose associated enterprises engage in controlled transactions with taxpayers electing a safe harbor. It was further suggested that safe harbors may not be compatible with the arm's length principle. Therefore, it was concluded that transfer pricing safe harbors are not generally advisable and consequently, the use of safe harbors was not recommended. No? It was during 1995 na yung safe harbors was not recommended. Okay. Despite these generally negative conclusions, a number of countries have adopted safe harbor rules. Those rules have generally been applied to smaller taxpayers and or less complex transactions. They are generally evaluated favorably by both tax administration and taxpayers, who indicate that the benefits of safe harbors outweigh the related concerns when such rules are carefully targeted and prescribed and when efforts are made to avoid the problems that could arise from poorly considered safe harbor regimes, no? So, kahit na hindi inalaw noong 1995 sa OECD yung safe harbors, there are still countries who uh, adopted safe harbor rules, no? The appropriateness of safe harbors can be expected to be most apparent when they are directed at taxpayers and or transactions which involve low transfer pricing risk and when they are adopted on bilateral or multilateral basis. It should be recognized that the safe harbor provision does not bind or limit in any way any tax administration other than the tax administration that has expressly adopted the safe harbor. Although safe harbors primarily benefit taxpayers by providing for more optimal use of resources, they can benefit tax administrations as well. Tax administrations can shift audit and examination resources from smaller taxpayers and less complex transactions, which may typically be resolved in practice on a consistent basis as to both transfer pricing methodology and actual results to more complex, higher risk cases. At the same time, taxpayers can price eligible transactions and file their tax returns with more certainty and with lower compliance burdens. However, the design of safe harbors requires careful attention to concerns about the degree of approximation to arm's length prices that would be permitted in determining transfer prices under safe harbor rules for eligible taxpayers. The potential for creating inappropriate tax planning opportunities, including double non-taxation of income, equitable treatment of similarly situated taxpayers, and the potential for double taxation resulting from the possible incompatibility of the safe harbors with the arm's length principle or with the practices of other countries. No? So the following discussion considers the benefits of and concerns regarding safe harbor provisions and provides guidance regarding the circumstances in which safe harbor may be applied in a transfer pricing system based on the arm's length principle. No? So safe harbor along with the transfer pricing, dapat yung safe harbor should also be based on the arm's length principle. Ano yung arm's length principle natin? The related party transaction should be comparable or similar with that of the independent party transactions. Uh, so definition and concept of safe harbors. Some of the difficulties that arise in applying the arm's length principle may be avoided by providing circumstances in which eligible taxpayers may elect to follow a simple set of prescribed transfer pricing rules in connection with clearly and carefully defined transactions, or may be exempted from the application of the general transfer pricing rules. In the former case, prices established under such rules would be automatically accepted by the tax administrations that have expressly adopted such rules. These elective provisions are often referred to as safe harbors. A safe harbor in a transfer pricing regime is a provision that applies to a defined category of taxpayers or transactions and that relieves eligible taxpayers from certain obligations otherwise imposed by a country's general transfer pricing rules. A safe harbor substitutes simpler obligations for those under the general transfer pricing regime. Such a provision could, for example, allow taxpayers to establish transfer prices in a specific way. For instance, by applying a simplified transfer pricing approach provided by the tax administration. No? Alternatively, a safe harbor could exempt a defined category of taxpayers or transactions from the application of all or part of the general transfer pricing rules. Parang exemptions, no? Often, eligible taxpayers complying with the safe harbor provision will be relieved from burdensome compliance obligations, including some or all associated transfer pricing documentation requirements. So, pagpasok ka dun sa safe harbor, pati yung documentation requirements mo will be spared. For purposes of the discussion in this section, safe harbors do not include administrative simplification measures which do not directly involve determination of arm's length prices. No? So, simplified or exemption from documentation requirements in the absence of a pricing determination and procedures whereby a tax administration and a taxpayer agree on transfer pricing in advance, no, of the control transactions, advance pricing arrangements, which are discussed in section F of this chapter. The discussion in this section also does not extend to tax provisions designed to prevent excessive debt in a foreign subsidiary, which is 10 capitalization rules. Sa Pilipinas, wala po tayong 10 capitalization rules, but in some other countries, meron sila. Ano po itong 10 capitalization rules? Ito yung rules that discourage yung very small capital or investment in a company. Tapos, dagdagan mo na lang siya ng mga advances to, advances from. Ito yung constructive na equity contributions. So, sa ibang bansa, bawal po yan. No? Although they would not fully meet the following description of a safe harbor, it may be the case that some countries adopt other administrative simplification measures that use presumptions to realize some of the benefits discussed in this section. For example, a rebuttable presumption might be established under which a mandatory pricing target would be established by a tax authority, subject to a taxpayer's right to demonstrate that its transfer price is consistent with the arm's length principle. Under such a system, it would be essential that the taxpayer does not bear a higher burden to demonstrate its price is consistent with the arm's length principle than it would if no such system were in place. In any such system, it would be essential to permit resolution of cases of double taxation arising from application of the mandatory presumption through the mutual agreement process. Oh, so yun yung mutual agreement procedures. Benefits of safe harbors. Ano naman yung benefits ng safe harbors? The basic benefits of safe harbors are as follows. Number one, simplifying compliance and reducing compliance cost for eligible taxpayers in determining and documenting appropriate conditions for qualifying control transactions. Number two, providing certainty to eligible taxpayers that the price charged or paid on qualifying control transactions will be accepted by the tax administrations that have adopted the safe harbor with a limited audit or without an audit beyond ensuring the taxpayer has met the eligibility conditions of and complied with the safe harbor provisions. No? Number three, permitting tax administration to redirect their administrative resources from the examination of lower risk transactions to examinations of more complex or higher risk transactions and taxpayers. So yun yung po yung benefit ng safe harbor. Compliance relief. Application of the arm's length principle may require collection analysis of data that may be difficult or costly to obtain and or evaluate. In certain cases, such compliance burden may be disproportionate to the size of the taxpayer, its functions performed, and the transfer pricing risk inherent in its controlled transactions. Properly designed safe harbors may significantly ease compliance burdens by eliminating data collection and associated documentation requirements in exchange for the taxpayer pricing qualifying transactions within the parameters set by the safe harbor, especially in areas where transfer pricing risks are small and the burden of compliance and documentation is disproportionate to the transfer pricing exposure, such as trade-off, may be mutually advantageous to taxpayers and tax administrations. Under a safe harbor, taxpayers would be able to establish transfer prices which will not be challenged by tax administrations providing the safe harbor without being obligated to search for comparable transactions or expend resources to demonstrate transfer pricing compliance to such tax administrations. Certainty. Another advantage provided by a safe harbor is the certainty that the taxpayers' transfer prices will be accepted by the tax administration providing the safe harbor, provided they have met the eligibility conditions of and complied with the safe harbor provisions. The tax administration would accept, with limited or no scrutiny, transfer prices within the safe harbor parameter. Taxpayers could be provided with relevant parameters which would provide a transfer price deemed appropriate by the tax administration for the qualifying transaction. Okay. Administrative simplicity. A safe harbor would result in a degree of administrative simplicity for tax administration. Although the eligibility of particular taxpayers or transactions for the safe harbor would need to be carefully evaluated depending on the specific safe harbor provisions, such evaluations would not necessarily have to be performed by auditors with transfer pricing expertise. Once eligibility for the safe harbors has been established, qualifying taxpayers would require minimal examination with respect to the transfer prices of controlled transactions qualifying for the safe harbor. This would enable tax administration to secure tax revenues in low-risk situations with a limited commitment of administrative resources and to concentrate their efforts on the examination of more complex or higher risk transactions and taxpayers. A safe harbor may also increase the level of compliance among small taxpayers that may otherwise believe their transfer pricing practice will escape scrutiny. No? So, what are the concerns over safe harbors? The availability of safe harbors for a given category of taxpayers or transactions may have adverse consequences. No? These concerns stem from the fact that, number one, the implementation of a safe harbor in a given country may lead to taxable income, taxable being reported that is not in accordance with the arm's length principle. No? So there is a violation of the arm's length principle. Number two, safe harbors may increase the risk of double taxation or double non-taxation when adopted unilaterally. Excuse me. Safe harbors potentially open avenues for inappropriate tax planning. And number four, safe harbors may raise issues of equity and uniformity. No? So yun yung mga issues na nakikita ng ating policymakers on the adoption of the safe harbors. No? Patayin mo na to, Hari, yung isa na lang ang ano mo. Pandarin mo. Okay. Divergence from the arm's length principle. When a safe harbor provides a simplified transfer pricing approach, it may not correspond in all cases to the most appropriate method applicable to the facts and circumstances of the taxpayer under the general transfer pricing provisions. For example, a safe harbor might require the use of a particular method when the taxpayer could otherwise have determined that another method was the most appropriate method under the facts and circumstances. Such an occurrence could be considered as inconsistent with the arm's length principle, which requires the use of the most appropriate method. Safe harbors involve a trade-off between strict compliance with the arm's length principle and administrability. They are not tailored to fit exactly the varying facts and circumstances of individual taxpayers and transactions. The degree of approximation of prices determined under the safe harbor with prices determined in accordance with the arm's length principle could be improved by collating, and frequently updating a pool of information regarding prices and pricing development in respect of the relevant types of transactions between uncontrolled parties of the relevant nature. However, such efforts to set safe harbor parameters accurately enough to satisfy the arm's length principle could erode the administrative simplicity of the safe harbor. No? Okay. Any potential disadvantages to taxpayers from safe harbors diverging from arm's length pricing are avoided when taxpayers have the option to either elect the safe harbor or price transactions in accordance with the arm's length principle. With such an approach, taxpayers that believe the safe harbor would require them to report an amount of income exceeding the arm's length amount could apply the general transfer pricing rules. While such an approach can limit the divergence from arm's length pricing under a safe harbor regime, it would also limit the administrative benefits of the safe harbor to the tax administration. Moreover, tax administrations would need to consider the potential loss of tax revenue from such an approach, where taxpayers will pay tax only on the lesser of the safe harbor amount or the arm's length amount. Countries may also be concerned over the ability of taxpayers to opt in and out of a safe harbor, depending on whether the use of the safe harbor is favorable to the taxpayer in a particular year. Countries may be able to gain greater comfort regarding this risk by controlling the conditions under which a taxpayer can be eligible for the safe harbor. For example, by requiring taxpayers to notify the tax authority in advance of using the safe harbor or to commit to its use for a certain number of years. Huh? So, uh, taxpayers that wanted to uh, make shield with the safe harbor has to inform the tax authority. Risk of double down taxation, and mutual agreement concern. No? So yung risk of double taxation. One major concern raised by a safe harbor is that it may increase the risk of double taxation. If a tax administration sets safe harbor parameters at levels either above or below arm's length prices in order to increase reported profits in its country, it may induce taxpayers to modify the prices and would otherwise have charged or paid to controlled parties in order to avoid transfer pricing scrutiny in the safe harbor country. The concern of possible overstatement of past taxable income in the country providing the safe harbor is greater where that country imposes significant penalties for understatement of tax or failure to meet documentation requirements, with the result that there may be added incentives to ensure that the transfer pricing is accepted in that country without further review. If the safe harbor causes taxpayers to report income above arm's length levels, it would work to the benefit of the tax administration providing the safe harbor, as more taxable income would be reported by such domestic taxpayers. On the other hand, the safe harbor may lead to less taxable income being reported in the tax jurisdiction of the foreign associated enterprises, that is, the other party to the transaction. The other tax administrations may then challenge prices derived from the application of a safe harbor, with the result that the taxpayer would face the prospect of double taxation. Accordingly, any administrative benefits gained by the tax administration of the safe harbor country would potentially be obtained at the expense of other countries which, in order to protect their own tax base, would have to determine systematically whether the prices or results permitted under the safe harbor are consistent with what would be obtained by the application of their own transfer pricing rules. The administrative burden saved by the country offering the safe harbor would therefore be shifted to the foreign jurisdictions. In cases involving smaller taxpayers or less complex transactions, the benefits of safe harbors may outweigh the problems raised by such provisions. Provided a safe harbor is elective, taxpayers may consider that a moderate level of double taxation, if any, arises because of the safe harbor in an acceptable price to be paid in order to obtain relief from the necessity of complying with complex transfer pricing rules. One may argue that the taxpayer is capable of making its own decision in electing the safe harbor as to whether the possibility of double taxation is acceptable or not. No? So, where safe harbors are adopted unilaterally, care should be taken in setting safe harbor parameters to avoid double taxation, and the country adopting the safe harbor should generally be prepared to consider modification of the safe harbor outcome in individual cases under mutual agreement procedures to mitigate the risk of double taxation. At a minimum, in order to ensure that taxpayers make decisions on a fully informed basis, the country offering the safe harbor would need to make it explicit in advance whether or not it would attempt to alleviate any eventual double taxation resulting from the use of the safe harbor. Obviously, if a safe harbor is not elective and if the country in question refuses to consider double tax relief, the risk of double taxation arising from the safe harbor would be unacceptably high and inconsistent with double tax relief provisions of treaties. No? So, very careful din po yung mga tax authorities because in adopting a safe harbor rules, pwede ma-violate yung tax treaties. On the other hand, if a unilateral safe harbor permits taxpayers to report income below arm's length levels in the country providing the safe harbor, taxpayers would have an incentive to elect application of the safe harbor. In such a case, there would be no assurance that the taxpayer would report income in other countries on a consistent basis or at levels above arm's length levels based on the safe harbor. Moreover, it is unlikely that other tax administrations would have the authority to require that income be reported above arm's length levels, while the burden of undertaxation in such situations would fall exclusively upon the country adopting the safe harbor provision and should not adversely affect the ability of other countries to tax arm's length amounts of income. Double non-taxation would be unavoidable and could result in distortion of investment and trade. No? It is important to observe that the problems of non-arm's length results and potential double taxation and double non-taxation arising under safe harbors could be largely eliminated if safe harbors were adopted on a bilateral or multilateral basis by means of competent authority agreement between countries. So under such procedure, two or more countries could by agreement define a category of taxpayers and or transactions to which a safe harbor provision would apply and by agreement establish pricing parameters that would be accepted by each of the contracting countries if consistently applied in each of the countries. Such agreements could be published in advance and taxpayers could consistently report results in each of the affected countries in accordance with the agreement. The rigor of having two or more countries with potentially divergent interests agree to such a safe harbor should serve to limit some of arbitrariness that otherwise might characterize a unilateral safe harbor and would largely eliminate safe harbor created double taxation and double non-taxation concerns. Particularly for some smaller taxpayers and or less complex transactions, creation of bilateral or multilateral safe harbors by competent authority agreement may provide a worthwhile approach to transfer pricing simplification that would avoid some of the potential pitfalls of unilateral safe harbor regimes. The Annex 1 to Chapter 4 of these guidelines contains sample memoranda of understanding that country authorities might use to establish bilateral or multilateral safe harbors in appropriate situations for common classes of transfer pricing cases. The use of this sample memoranda of understanding should not be considered as either mandatory or prescriptive in establishing bilateral or multilateral safe harbors. Rather, they are intended to provide a possible framework for adaptation to the particular needs of the tax authorities of the countries concerned. No? Possibility of opening avenues for tax planning. May nakikinig pa sa atin?
Viewers ma'am na anin po.
Sige. Safe harbors may also provide taxpayers with tax planning opportunities. Enterprises may have, tapusin natin itong safe harbor. Enterprises may have an incentive to modify their transfer prices in order to shift taxable income to other jurisdictions. No? So, usually ginagawa ito. This may also possibly induce tax avoidance to the extent that artificial arrangements are entered into for the purpose of exploiting the safe harbor provisions. For instance, if safe harbors apply to simple or small transactions, taxpayers may be tempted to break transactions up into parts to make them seem simple or small. No? So just to comply with the requirements of the safe harbor. If a safe harbor were based on an industry average, tax planning opportunities might exist for taxpayers with better than average profitability. For example, a cost-efficient company selling at the arm's length price may be earning a markup of 15% on controlled sales. If a country adopts a safe harbor requiring a 10% markup, the company might have an incentive to comply with the safe harbor and shift the remaining 5% to a lower tax jurisdiction. Consequently, taxable income would be shifted out of the country. So when applied on a large scale, this could mean significant revenue loss for the country offering the safe harbor. So yun yung mangyayari. This concern may largely be avoided by the solution noted in paragraph 4.119 of adopting safe harbors on a bilateral or multilateral basis, thus limiting application of safe harbors to transactions involving countries with similar transfer pricing concerns. In adopting bilateral and multilateral safe harbors, tax administrations would need to be aware that the establishment of an extensive network of such arrangements could potentially encourage safe harbor shopping via the routing of transactions through territories with more favorable safe harbors and take appropriate steps to avoid that possibility. Similarly, countries adopting bilateral safe harbors would be well advised to target fairly narrow ranges of acceptable results and to require consistent reporting of income in its country that is a party to the safe harbor arrangement. Treaty exchange of information provision could be used by countries where necessary to confirm the use of consistent reporting under such a bilateral safe harbor. Whether a country is prepared to possibly suffer some erosion of its own tax base in implementing a safe harbor is for the country to decide. The basic trade-off in making such a policy decision is between the certainty and administrative simplicity of the safe harbor for taxpayers and tax administrations on the one hand, and the possibility of tax revenue erosion on the other. Equity and uniformity issues. Safe harbors may raise equity and uniformity issues. By implementing a safe harbor, one would create two distinct sets of rules in the transfer pricing area. So yun na yun ang mangyayari. dalawang set of rules na yung magawa mo pag may safe harbor ka. Clearly and carefully designed criteria are required to differentiate those taxpayers or transactions eligible for the safe harbor to minimize the possibility of similar and possibly competing taxpayers finding themselves on opposite sides of the safe harbors threshold or conversely of allowing application of the safe harbor to unintended taxpayers or transactions. Insufficiently precise criteria could result in similar taxpayers receiving different tax treatment, one being permitted to meet the safe harbor rules and thus to be relieved from general transfer pricing compliance provisions, and the other being obliged to price its transactions in conformity with the general transfer pricing compliance provisions. So yung isa, kailangan comply with transfer pricing provisions. Yung isa naman, since nasa safe harbor, hindi. So preferential tax treatment under safe harbor regimes for a specific category of taxpayers could potentially entail discrimination and competitive distortion. So yun man disadvantages ng safe harbor. The adoption of bilateral or multilateral safe harbors could, in some circumstances, increase the potential of a divergence in tax treatment, not merely between different but similar taxpayers, but also between similar transactions carried out by the same taxpayer with associated enterprises in different jurisdictions. Recommendations on use of safe harbors. Transfer pricing compliance and administration is often complex, time-consuming, and costly. So properly designed safe harbor provisions applied in appropriate circumstances can help to relieve some of these burdens and provide taxpayers with greater certainty. Safe harbor provisions may raise issues such as potentially having perverse effects on the pricing decisions of enterprises engaged in controlled transactions and a negative impact on the tax revenues of the country implementing the safe harbors, as well as on the countries whose associated enterprises engaged in controlled transactions with taxpayers electing a safe harbor. Further, unilateral safe harbors may lead to the potential for double taxation or double non-taxation. No? So yun yung maging effect. However, in cases involving smaller taxpayers or less complex transactions, the benefits of safe harbors may outweigh the problems raised by such provisions. Making such safe harbors elective to taxpayers can further limit the divergence from arm's length pricing, where countries adopt safe harbors, willingness to modify safe harbor outcomes in mutual agreement proceedings to limit the potential risk of double taxation is advisable. Where safe harbors can be negotiated on a bilateral or multilateral basis, they may provide a significant relief from compliance burden and administrative complexity without creating problems of double taxation or double non-taxation. Therefore, the use of bilateral or multilateral safe harbors under the right circumstances should be encouraged. It should be clearly recognized that a safe harbor, whether adopted on a unilateral or bilateral basis, is in no way binding on or uh, precedential for countries which have not themselves adopted the safe harbor. For more complex and higher risk transfer pricing matters, it is unlikely that safe harbors will provide a workable alternative to a rigorous case-by-case application of the arm's length principle under the provisions of these guidelines. No? These guidelines is the 2017 OECD transfer pricing guidelines. No? Country tax administrations should carefully weigh the benefits of and concerns regarding safe harbors, making use of such provisions where they deem it appropriate. Okay. So, our next topic on our next live streaming would be on advanced pricing arrangements. No? So, on the definition and concept of advanced pricing arrangement or the APA. This is the advanced pricing arrangement, but For the BAR here in the Philippines, they have not yet crafted regulations on the advanced pricing arrangement. So, reminder for those who will attend on the, ano natin yun, Hari?
Transfer pricing update.
Transfer pricing updates on Saturday, no? So you are required to register. Nandiyan na lahat. Nagpadala na sila nung kanilang registration form.
Yes po nga.
I-print mo siya, saka ilagay mo sa isang folder, no? And then gagawa na tayo ng anong tawag dito, parang attendance sheet in advance so that pagdating ng anong tawag dito, ng Saturday, sa shout out natin lahat ng mga nagpa-register if they are present, no? That is our requirement for the certificate kasi magbibigay tayo ng certificate of attendance para sa ano natin sa seminar, no? May certificate of attendance po 'yan. And then for the updates, yun yung i-discuss natin sa inyo, yung 2020 na OECD Transfer Pricing Guidelines on financial transactions. No, ano yung mga financial transactions that involves the interest on loans, yung mga insurance, no? So, magkakaroon tayo niyan siguro 1.5 to 2 hours, no, bawat topic. So, our first topic is about the overview lang yan, ha? Overview lang po yan ng Ramo 1-2019. Why? Because yung Ramo 1-2019, napakahaba niyan. Hindi, 2 araw po yan pang kinakanda. Kaya expect na hindi natin matakil lahat ng topics on Ramo 1-2019, but might as well yung mga importante madidiscuss natin, no? And then we have the transfer pricing documentation. We have the preparation of the anong tawag dito? Segmented financial statement. At sana makapagbigay din ako sa inyo ng sample on the supply chain analysis, no? Kasi requirement din yan. And then yung another na magiging reminder ko, napaka-importante, yung inyong mga inventory, no? That you should reconcile it with your purchases kasi ang tendency magkakaroon ng inventory analysis yung ating mga examiners, and that is a potential source of discrepancy during the tax audit, no? So ngayon ang BAR are also improving the skills of their examiners to conduct a transfer pricing audit. That's why because of this requirement on transfer pricing documentation under BIR Form 1709, so talagang yung iba na noon, they refuse to study transfer pricing, no choice na po tayo. Kailangan natin talaga na aralin yung transfer pricing, otherwise, di tayo makapag-comply, no? And kahit titingnan pa ninyo, even the OECD transfer pricing guidelines requires talaga that there is a substantial compliance from the taxpayers para dun sa mga revenue regulations na nire-require ng tax authorities, no? So, with that, I would like to say thank you and let's call it a night.